Gopal Mahadevan, CFO at Ashok Leyland, is now joining us on a phone line. Sir, thank you so much for taking out time for us. Could you first start by the margins bit? Do you feel margins are just a function of steel prices, and because they have recovered on a QOQ basis, you may see an impact going ahead, or we have done some changes as far as the overall costing is concerned?
I think margins, thank you very much for the interest in Ashok Leyland. I think the margins are a factor of three broad reasons. One is the volume growth that you have. The second one is I would say the cost that you are able to manage and the realization that you are able to get. And the third one is, of course, I would say the mix of the products. So we have actually grown at, if you look at domestic volumes, we have grown at about 18.5% in domestic volumes as compared to the 14.5% growth that the industry has posted. Overall, we have grown 10% in revenues, and that has actually helped us to, overall improve the EBITDA margins. While there has been steel price increases which we have witnessed, we have also been able to get some price raises through, which has been the policy in the company. If we don't look at prices and discounts in absolute terms, what we look at is in margins. So we're seeing whether the entire portfolio of products are getting better in terms of gross margins, which has been another important reason for the EBITDA margins to be better. The third one is, of course, we continuously monitor the mix and try to kind of nudge the mix to an optimal, mix, and which is what again has happened. So overall, when you looked at it, the EBITDA margins for the quarter was about 11.2% as opposed to 10.1% in the same quarter last year.
Right. If I just come down and, look at the interest expenses, there was a decline over there. Is this just because of accounting change? Can you just tell us about that?
No, the interest expenses coming down is not account of accounting change. There could have been some minor forex changes that could have happened. But predominantly, you must realize that the company has been methodically reducing its debt. From today, as I speak to you, my debt equity is about 0.3:1. 3 years ago, it would have been about 2.2:1. So we have been actually methodically reducing debt through three means. One is generating cash from business. Second one is to reduce operating working capital. Third one is in the earlier part, in the earlier years, we have actually sold non-core assets also. So between last year and this year, if you were to look at the debt, the absolute debt amount is today only 1,600 crores as opposed to about 3,500 crores in the same quarter last year. So you've seen the benefits of the debt reduction coming in.
Right. As far as volume outlook is concerned, Q1 was not that great, especially for exports. But do you think overall we'll see a bounce back, or the range would be maintained in FY17 overall as on a 12-month basis?
Yeah, I would only put it this way. Instead of giving any outlook, I just explained to you, in the domestic side, we were reasonably satisfied with our growth because we had an 18.5% growth in volumes as opposed to the industry growth of 14.5%. Let me share with you that this is the 9th straight quarter in which we have been posting volume growth higher than industry. As far as exports are concerned, we have had a tad, I would say, a reduction in the export invoicing that happened in this current quarter because of some technical reasons, and some of the customers had to open some financial instruments, which actually got pushed into Q2. So hopefully we will actually see the recovery of exports happening in Q2.
Right. As far as overall trend is concerned, do you continue to gain market share? And that is leading the way ahead as far as growth is concerned?
Yeah, if we have grown faster than the market, then we have gained market share. That is exactly what has happened in the current quarter also. So we have gained market share by about 100 basis points in MHCV.
Right. Going ahead, what is the trend that you're seeing in the underlying economy now? I would just like to put it in perspective. So, we have the top companies coming out with their numbers on a daily basis. The revenue growth has not been that great. But, when we talk to any infra company, when we talk to any big economist, they always tell us that there is an underlying economy which is improving. You get a direct sense with customers and what's happening. Can you just tell us that what's happening on the ground for demand of such products which are linked to economy?
See, I think there are two factors. One is we have this inside out and the outside in. So from an inside out perspective, yes, it appears that, we've seen a tipper sales grow by nearly 100% this quarter. Not nearly, it's grown over 100% this quarter. So similarly, if you look at tractor sales, has also been quite healthy. The current quarter, which is we have had something like about 30% growth. And even in haulage, we have seen a 40% growth. So overall, when you look at it, we are seeing that there is an underlying growth that is happening. But this is from the inside out perspective. We are taking some inputs from our dealers, from end customers, etc. But from an outside-in perspective, we are seeing that the investment-led initiative of the government is kind of visible, more visible, I would say, today than it was 6 months ago. The economy sounds a little more confident. The the monsoons seem to be on track. They are, they seem to be favorable. We are seeing that the speed at which roads are getting laid is now stepped up significantly to almost 20, 21 kilometers a day. Mines are opening up. That is why you are also seeing capital goods stock prices actually firming up. And of course, this morning S&P seems to have rated India north up and saying that they could see not the rate, but the growth rate could go up to about 8%. So all of this augurs well. So, from the position that we are in at the moment, it looks like there is a lot of positive things going for the economy. And of course, for the commercial vehicle industry itself, one more thing that will augur well in the fourth quarter especially would be that we would all be shifting to Euro 4 by 1st of April 2017. When that happens, there is going to be quite a bit of pre-buying in Q4, which the industry is readying itself for.
Right. So, let me just talk about the, economy and then put Ashok Leyland into that. So, last time when we saw such a big pickup, Ashok Leyland was not a big player on a pan-India basis. But in the last 10 years, of course, you all have grown a lot. You all have improved your balance sheet a lot. You all have done a lot of launches which have come up ahead, which have got great response, and you all have made your presence higher. So now if we see an upturn in the economy, the growth rates could be much higher, or we are in a better position to exploit that?
See, we believe so. See, I'll tell you, one is we want to grow. We have our plans for growth in India and outside. So we want to, over the next 4 or 5 years, we want to do the following. We want to grow as an Indian player faster than the rate of the industry. We also want to grow our international revenue. The share of that is possibly, this quarter is about 7, it is average about 10, 11%. We want to grow it to about, 1/3 of our revenues over the next 5 years. We also want to grow the adjacent businesses like defense and, the aftermarket. We believe aftermarket holds a tremendous potential because the penetration levels for organized aftermarket is very low at the current, in the CV industry. So there is an upside that is there. All of this would actually ensure all of this will actually help to devolatilize the company from the ups and downs that happens in domestic truck industry. So that is one way of looking at growth. The second one is even within India, we want to see how are we growing? Is it not just absolute numbers? Am I growing on a pan-India basis? Am I giving more offerings to customers? Am I providing better services? And more importantly, when I say, is Ashok Leyland growing profitably? That becomes very, very important. So when we look at growth, we've got all the things broadly in place. We are possibly one of the commercial vehicle manufacturers who are absolutely current in their offerings in terms of an engine, chassis, and cabin. And we have our manufacturing facility in place. Our network is significantly higher than what it was 5 years ago. If when the economy is actually going to grow, I would say that we are very ready for it.